Hey, what's up, everybody? Joe Steele, crypto in the house. Checking out some crypto news today. Going to jump right in because there's kind of a lot going on here. BlackRock partners with Coinbase. Right now, it looks like they're offering Bitcoin access to institutional investors despite the market turn down. The largest asset manager in the world, BlackRock, offering customers of Coinbase customers of them access to Bitcoin to some of their institutional clients. Since the investment platform Aladdin will get access to crypto trading, custody, prime brokerage, and reporting capabilities. Joseph Chalom, the global head of strategic ecosystem partnership with BlackRock, says our institutional clients are increasingly interested in gaining exposure to digital asset markets and focused on how to efficiently manage the operational life cycle of these assets. So some people are down on Coinbase. Obviously the stock rallied as a result. People have their opinions about BlackRock. A lot of people in the real estate world, especially. We will see where that goes, but interesting for now to see what this rally is going to do and where it's going to sort of shake out once it settles. Voyager, according to the Wall Street Journal, they got approval to return $270 million to their customers. The judge, Michael Wiles, who's overseeing this bankruptcy, ruled that the company provided sufficient basis to support its contention that customers should be allowed access to custodial account held at the Metro Commercial Bank. Looks like over 100,000 creditors between $1 billion and $10 billion in assets and liabilities of the same value, Voyager estimates. And last week, the company was ordered by the FDIC to cease and desist from making false and misleading claims that its customers' funds were protected by the government, which brings me to why the FDIC had to put out their own statement in general, just saying like, hey, look, with these crypto companies, you're not FDIC insured. Like if you put it into your local Chase or Wells Fargo or Bank of America, up to your $250,000, they very specifically say your product is not covered by their insurance, such as you would with a checking or savings account. Deposit insurance does not apply to non-deposit products such as stocks, bonds, money market, mutual funds, securities, commodities, or crypto assets. So, coming off the heels of this Voyager announcement, definitely something they wanted to make sure they had out there clear for the people to understand your crypto assets are not FDIC insured. Which is actually kind of funny here. Dylan LeClaire, who's always great with his tweets here, has this thing about the WEF listed as one of Celsius's creditors. So that will be interesting to kind of see again, when this whole Celsius thing, comes to fruition or whatever, maybe customers of Celsius will be lucky enough to get back 50-75% of what they lost with Celsius. But to see the WEF as one of their creditors, this is pretty wild. So keep a watch on that because I'm sure that there's a lot of people laughing about this sort of discovery. Jumping into some real estate news, Fox Business is saying that the 30-year fixed mortgage rate saw its biggest weekly decline since 2020. So basically, it fell 31 basis points to 5.43%, according to the MBA. The drop in rates led to increases in both refinance and purchase applications, but still compared to a year ago, activities depressed. But at least we are seeing some sort of a relief for first-time home buyers. And you can see when you're out there, again, a lot less competition, a lot less, people writing multiple offers in the double digits. But again, maybe some relief on the way for home buyers. Redfin says home buyers are seeking out less expensive locales like Tampa, San Antonio because of the surging cost of housing and other goods is limiting their ability to buy homes in many U.S. cities. I think we all knew people from major cities on the coast like California, San Francisco, LA, New York City, Metro are, heading to Florida and out here on the West Coast heading to, Texas, Arizona, Nevada. But a record 32.6% of Redfin users nationwide are looking to move from one metro to an area in the second quarter, which is up from 32.3% in the first quarter and roughly 26% before the pandemic. So still higher than those pre-pandemic levels, but people are still heading to these places. And like I mentioned the other day, inflation's also going up in these Florida and Texas and all these markets as well. So that's kind of an interesting parallel that we're seeing, but people are still looking for that cheaper housing and getting out of the more expensive. And here's sort of the chart where it can show you how it flowed from 2019 Q2 all the way to Q2 of this year. And you can see that sort of scale all the way through the pandemic and, right back up to those highs. According to House Canary, CNBC had reported that rents are also soaring in 5 U.S. major metros. So when you see this next slide, you're going to see the top rents in terms of cities and the low 10 of rents in the U.S. as well. But basically, we're seeing for the first half of this year, national average of about $2,500 a month, which was up, 13.5% almost from the same time last year. And here we can see the 5 most expensive monthly rents, LA, San Diego, Bridgeport, San Jose, Oxnard, California, and the 5 lowest: Mobile, Alabama, Dayton, Ohio, Wichita, Kansas, Akron, Ohio, Canton, Ohio. But it kind of gives you a good, measure of what you're looking at in each state. I mean, it's basically a 3x from the lowest of the low to the highest of the high. And LA is also including Anaheim there in Orange County. So we are getting a big range there, whereas, Canton, Ohio, is a lot smaller of a market. So you would understand that correlation, but at the same time, a 3x, 4x here, it's a lot of money for people who are trying to stay in these competitive markets. So that's kind of it today. It's a late night here, but I do appreciate you joining my stream tonight, and I would love for you guys to continue checking in with me. I'm here every day doing these streams. Again, I focus on crypto and then the other half real estate, just to kind of give you a perspective on both sides. A lot of channels will focus on one or the other, but I feel like these two are, again, they're going to be blending so much in the future where buying houses and crypto is going to be such a norm going forward that I think being ahead of the game and understanding both sides of these investment vehicles is only beneficial to people in the long run. So, again, if you like this content or find value, please like this video and consider subscribing to my channel. I will be continuing to put this content out, like I said, and appreciate any feedback in the comments you guys give me, positive, negative, whatever you think would help you and would help me make a better product for you all to tune into and hopefully learn from. And I'm always looking to learn myself. So with that, I hope you all have a good night, and I will see you tomorrow on the next broadcast.